Alrighty, folks, I am actually in New York City participating in Resi Day tomorrow, so don't have the normal YouTube setup. But because we do the daily financial news 5 days a week, I'm going to record it early and then go check out New York City. So, what do I got on the agenda today? It is Thursday, so you know that means we need to talk about the weekly unemployment numbers, and they came in at slightly better than expected. Yes, folks, last week, just as you remember, they were 216. Expectations were for 223. These are all in thousands. And actuals were 221,000. So again, as long as we're staying within trend or that band of 220 to kind of like 235, nothing to write home about. It is the number that I continually look at because if something's going to change in the employment market, I think we're going to see it there first. It is Fed Day. I am excited for Fed Day. I'll be interested to see what happens. I noted down a lot of questions. Again, I do think that the market expects a 25 basis point cut. I think it would be interesting to see if anything changed because of Tuesday's elections. I think we're going to get a lot of questions, and these were all the questions I had. We'll see if the reporters had the same questions for Jerome Powell when he is in front of the microphone for the press release. I guess the first question I would have is, hey, does President-elect Trump change anything in the Fed's mind? Again, I think he's not going to answer that question. I think he's going to hem and haw. But you have to imagine that the Trump victory did change something, and I'm curious if the Fed had any of those discussions. I will be particularly interested in what is called the Fed minutes, because I don't think Jerome Powell is going to answer that question, let's be frank. But the Fed minutes, I think, will have a summary of did they talk about the election at all. And you have to imagine they did, so it will be interesting. Next, specifically, I'll be interested to see if the Fed raises what is called the neutral rate. Heading into the election, I think 17 out of 18 Fed presidents were saying the neutral rate was somewhere between 3 and 3.5. Michelle Bowman being the lone dissenter, thinking it's closer to 4. I'm curious if more of the Fed presidents are raising their expectation, and maybe the neutral rate is 4. That's important because if the neutral rate is higher, we are going to get less cuts. It is also potential not only that we're going to get less cuts, but they will be slower cuts, meaning maybe there's one every other meeting or something of that nature. So that's question number 2. I'm going to be curious, do they talk about a second wave of inflation? Talk about lower tax receipts, higher deficits, trade policies. Again, now that the election is over, it is relevant for the Fed to talk about a new set of policies, a new set of issues that undoubtedly will impact what the Fed is talking about and thinking about. And then lastly, are they thinking about maybe being less aggressive with rate cuts or more aggressive with rate cuts? Yesterday, I put out a video with Convoy Home Loans just taking a crazy idea that maybe, just maybe, the Fed wants to accelerate getting to neutral so that they are at a lower bound or at neutral and have more flexibility. That's what or at least I postulated yesterday as a possibility. It's highly unlikely that a Tuesday's elections, push the Fed, but it was an interesting brain teaser for me to think about why the Fed might be interested in that. But again, is the Fed going to be more aggressive or is the Fed going to be less aggressive, right? These are all important things. Why? Because as you've seen, the 10-year note, which again is a proxy plus spread to mortgage rates, has simply taken off. The mortgage rate, I believe I wrote it down, was 4.43. Yes, 4.43. I think on Tuesday morning it was like, what was it, 4.14, 4.15, something like that. So again, a pretty healthy move in the 10-year, likewise healthy move in mortgage rates. Next up on mortgage rates, I'm going to be watching over the next 4 weeks. Does the spread grow? Remember last year the spread was over 300 basis points. The traditional average again is 180 basis points. Today we're sitting at about 80 basis points. So we can still come in, or we could grow, right? Are mortgage rates at 7 today for homeowners? Yes. Could they be 8% if banks get nervous? Yeah, of course they could. So again, I will be watching that. So again, where does the 10-year stop? Is 4.5 kind of the natural limit? We're going to see. I do want to talk about the housing market. It is very clear to me that the buyer's market that we called, what did we call that? 8 weeks ago, 10 weeks ago, is in still force. I think the buyer's market is actually getting better. You have to remember that some people have to sell, and some people have to sell by the end of the year. Yes, there are tax consequences. There are just motivations to disposition property. So again, if you are an investor, investors and cash buyers are really the only people that are shopping today. So if you happen to be one of those people, please take advantage of the environment. Buyers markets do not come around long. They do not last long. But again, when they do, it is your job to get the best deal possible. So again, these buyers markets are important. Something I want to do occasionally is I want to bring to you a question that I get from school, right? School Community, one rental at a time. It is growing, growing, growing. In fact, we got 2 new school members yesterday, Samina and Jason. Thank you for joining the School Community. Welcome. Make sure you introduce yourself, ask questions, get to level 2, level 3, lots of valuable free goodies unlock when you get to those levels. But get to the question. This is from Warren. Warren is asking, hey, Michael, when you and Olivia got started in Fresno, how did you manage contractors? Were you nervous? You're 3 hours away. Warren is basically saying, hey, I'm nervous. I don't know what to do. So first and foremost, the answer is yes. Of course we were. A lot of people, when they think out of area or out of state investing, Warren, they kind of lock into what's called the core 4. The core 4, it often called your real estate agent, your mortgage broker, your contractor, and your property manager. I do think the core 4 is important, but like a lot of simple things that I see in the real estate education space, to me, it does not start with the core 4. I think the core 4 actually could do you dirty. The core 4, all of them, all of the core 4 are paid by you. What I strongly recommend, and this is why, one of the reasons to join school, Warren, is I strongly recommend you find other investors that are already successful in your market. The reason you need that is you need a set of people that you have relationships with that you're not paying. You need to be able to ask a friend, hey, could you do a drive-by for me? Just, 10 minutes out of your way, take a couple of pictures, maybe a video. I think so-and-so did me dirty, or so-and-so is asking for money. I want somebody to verify. So again, when you are thinking out of state or out of area, I would frankly not worry about the core 4 until I met 3, 5, 8, 10 other investors who are successful. And by successful, I don't mean have hundreds of units. I mean investors that have 1, 3, 5. You want to ask questions. You want to be of value. You want to give back and reciprocate. You just need to build the network. One of the 7 rules of ORAT is you need to meet 2 new people a week. And if I was going into a new market, I would not worry about the core 4 until I met other investors. So Warren, hopefully that made sense. I hope you appreciate that, folks. Again, the core 4 is important, but it doesn't start there for me. Please grow your network of people you are not paying, whether that's family, college friends, relationships on the internet, whatever it is. Again, do the work, network, grow. And again, be a good person. Be a good person. Looks like Resi Club. Shout out Lance Lambert, again, host of Resi Day tomorrow. So glad to be in New York and participating in the first one. Thank you for the opportunity. He got some information from CoreLogic's chief economist, Selma Hepp. Selma Hepp is saying, what might the President-elect Trump, is that how you say it? I think that's how you say it. What might his election be for housing? What might be the impact? Again, Selma Hepp, chief economist at CoreLogic, saying maybe we will get some rezoning of federal land. I think that's an interesting concept. I believe both parties talked about that. Again, if we can get some land rezoned, focus on entry-level housing, it could be a way to create some affordable units. Thinking about, there will undoubtedly be some tax cuts. Will that be helpful? Will there be home buyer tax credits? Maybe. Will there be some down payment assistance? Maybe. Again, folks, my hope is we focus on supply, not goosing demand. Anything that sort of generates a wave of sudden demand into a very inelastic supply is a problem, in my opinion. So, folks, we got to think about a lot of things. Again, a lot of things that I am thinking about this morning as I look at 2025 and 2026. One, will inflation come back? There is without question a possibility that we have a wave of inflation. There are a lot of things that could bring that. Could it be tariffs, reshoring, wages? There are lots of things that you and I will need to be paying attention to. Taxes. Where are lower taxes coming? Is it going to help the everyday American? What will the lower taxes incentivize? One of the things that I believe about the tax code is it's not a penalty system, it's a reward system. So what are we looking to do? Are we looking to build, grow, start companies? What will any tax changes be? 3, deficits. I am one that believes deficits matter. And I believe that deficits will eventually really matter. I do not know when that is, but it certainly feels closer than it was a few years ago. So again, I think printing or a $2 trillion deficit every year is a problem. And I think it will be a problem sooner than maybe a lot of people think. Number 4, smaller government. What might a smaller government be? What might it look like? Again, we have heard things like Kennedy is going to go in and gut FDA and all of these other things. Again, I'm not here to say that's good or bad. I'm just saying what happens. What happens if we see wave after wave after wave of government cuts? I don't know. I don't know what happens. I don't know. Smaller government. I am here for it. Let me be clear. I'm definitely in the camp of smaller government is good. But I think there's a chance that we see some swift and sudden changes and a big reduction. So again, I'm here for it. We'll all have to deal with it. But again, these are questions that I see. And then finally, thankfully, I suspect we will have less wars. I've already seen some posts about Russia and Ukraine starting to want to negotiate. I saw a post that Hamas is saying, let's get this over. I think we could all agree less wars, less death is a good thing. So again, these are all things that I am thinking about because again, we're going to have to deal with this together. The deck is set and it's our job to figure out how to navigate through this environment. We did just have our school accountability group on Wednesday. Quick kind of summary again, folks. If you're getting started, you want to make some hay, you need to join some groups like this accountability group. We have 3 plus a real estate agent broker mastermind already scheduled every week. 4 days a week we have things that you could join. Again, find the one that fits for your schedule. Join that one. Wednesday summary. They talked about negotiations. Specifically negotiations around seller financing. They talked about some painting techniques. They talked about a software tool called Bright Investor. Again, lots of things are open for discussion. Bring what's important to you. Get around other amazing folks. Again, it is Fed Day. Looks like we're going to get a 25% or 25 basis point cut. But where do we go from here is really what I'm thinking about. Let me look at my notes. Anything else I want to highlight? Nope, I think that's it. I know we don't have the normal setup, but it was important for me to get this done. Like, subscribe, comment, become part of school. It's only 67 cents a day. Get in the right rooms. Get around the right people. Have fun. Be amazing. And if you're going to Resi Day tomorrow, come by and say hi. Love to autograph your book. Let's just keep being good people, okay? Bye.